Now, the VIX was down 4.5% today. It's down to 14.68, dropping back below the 50 and the 200 here. So again, I told you I was watching. Do we start seeing this turn back up, get another leg down, or do we start seeing the VIX drop back down to move towards the gap fill here and see the S&P try to get a bottom? Okay, I think we're eventually going to move back to 5,200. Question is, do we got to get a bigger drop before that happens? We try to bottom out with the higher low or a slightly lower low and bottom out and get a recovery. So I'm watching the VIX closely. Got the bullish cross of the 50 and the 200 previously. Volatility had spiked in late 2021 and we got a bottom and we went back up and we made a slightly higher high in an overall topping process. Did we get something like that here? We have established a bottom at the 20-week moving average. We very well could go up and try to fill the gap at 5,200 or move to 5,300 and get a top much like what we had at the 2022 high. Bigger sell-off right here, right now. Then the VIX bounces off of these levels. But again, could be witnessing something like what we had over here with the 2022 top, where again we saw the bullish cross of the 50 above the 200 and volatility peak. S&P kind of went sideways there after the November peak on into December, and eventually in January pushed up to a new high and broke higher out of that consolidation. It's still possible that that happens if we don't break the trend line that I'm showing you in this video, the channel line that I've been talking about. Bulls and bears fight it out for control. Again, some momentum signals have turned bullish, but most of the trending signals are still bearish at this point, and some of the momentum signals are still bearish. So again, kind of a mixed bag as we're kind of going sideways, trying to bounce off that 20-week moving average. Here, critical mass 2.0, still bearish at this point, showing the trend is still bearish. Short-term trend is still bearish. Please support the channel with the link directly below. That allows me to be able to provide you this information. If you like the chart, you like the indicators, let me know that by supporting the channel. If you could take a moment to do that, I would really, really appreciate it. Just follow the link below to take you to a secured site. You could donate any amount you want or make it a recurring donation. If you do that, I thank you. I don't have any sponsors, just a direct relationship with you. If you could take a moment to help out, I would really appreciate it. It would really be encouraging to hear from you today. So thank you for your consideration for that. Again, mass going flatline, just kind of showing we're going in this kind of trading range. Signals are still pretty much bearish, but some momentum signals have turned back to bullish. We're now kind of going sideways here. So again, you've got momentum signals mixed. Here, the short-term trend is still bearish. Here, the momentum line is still blue and bullish, but the trending signal, the swing trend line, it's bearish. We're seeing, trying to get momentum above the rainbow cloud here. The rainbow cloud's acting as support, trying to turn back to bullish with the balance of power. And some momentum signals are bullish, but again, many of the trend signals are still bearish. So I keep saying, in order to turn things around, you got to get back above the 20, you got to get back above the 50 if we're going to get any kind of rebound. Levels act as resistance. Again, we could test the low or the 100 period moving average. And trending signals do remain bearish. For now, we'll see if signals start turning back to bullish or not. We just got rejection off VWAP resistance from our two highs right here. We turned off of the peak right there, which is a red line. Directly above it is the peak from over here. When we turned off the trend line of resistance, things are going to turn back to bullish. You got to clear these levels. If we can't, then these are support levels down here. And if we do go lower, we break the trend line and then we take out this low. There's risk of a bigger drop, or again, trying to find a bottom if we form a divergence on the RSI in the daily time frame. Again, trending signals remain bearish. The cloud is still bearish. The oscillators are still in negative territory. So again, we'll see if that changes. If we try to form a bottom, if signals remain bearish, then again, there's risk of more selling. Okay, we have earnings again this week. After hours, we're getting Apple, we're getting Coinbase. More earnings next week. We're in the heart of earnings season. We're also going to get the jobs report on Friday. The private payrolls came in higher than expected. 192 as expected, 193. It's still lower than the previous reading. Jobs report is supposed to come in at 240,000. Previously, the reading was 303,000. The unemployment rate is supposed to hold steady at 3.8%. We'll get that before the market opens tomorrow. Again, we had Apple earnings and after hours. Apple announces the largest ever buyback as iPhone sales drop by 10%. And I've talked about companies do these buybacks in order to be able to constantly beat earnings and make things look better. Now, iPhone sales dropped 10%, but they still beat on earnings, the earnings estimate, and they beat on revenue as well. And as I've been talking about, Apple is trying to bottom around its 400-period moving average. I've been talking about that. Apple was up 2.20% for the session, and it's up nearly 7% in after hours. Here it is. I've been talking about this 400-period moving average and the bullish divergence that has formed right there. And again, got this death cross going on, but I told you, again, we could get a big rebound with Apple. We still have these gaps overhead. And again, like back at the October low, we have a bullish divergence. Now, while the stock market has pulled back, NASDAQ by 8%, S&P by 6%, and we bounced, Apple, again, was going down all the while back to the 400-period moving average here and gave back all of the gains. Okay, and we came back here just slightly below this level, and now we're trying to rebound. A double top, and now we have a possible double bottom if we end up moving to a new high, but if we don't, if we just get a lower high, the double top could still be in play. And again, the confirmation line, we tried to breach it here ever so slightly and bounced. Talking about this divergence here around our 400-period moving average, and again, now we're seeing Apple up 7% in after hours, moving back to levels in after hours above our 200-period moving average. Get down here, the bullish divergence on the MACD as well. So if MACD goes positive by tomorrow's close with the earnings, then again, that would be a big plus for Apple. Now, while Apple's been going down, NVIDIA going up, but now it has started to have some volatility, and so NASDAQ's pretty much following NVIDIA. And again, NASDAQ and NVIDIA doing the same thing, getting a series of higher lows. And again, up over 3% today. We have the 10 and 20 below the 50. If we get rejection in this area, start dropping down and take out the slow, you're going to get a bigger drop on NASDAQ. If we can bounce, put in a short-term bottom in the market. If we go lower, there's still a possibility with NASDAQ and NVIDIA here of a divergence forming on the RSI should we take this level out. Still have the possibility of a bear flag here on NVIDIA, and that's what formed back over here that eventually gave us a lower high and a lower low. So you're forming another bear flag, but we have a major trend line of support on both NASDAQ and S&P. Futures are up in after hours on the Apple earnings. After the Fed meeting, we have the dollar and the 10-year turning down. Here's a dollar weekly chart. And again, if it turns down to try to back test, that can help the stock market. That can help Bitcoin. But if we don't see a pullback with the dollar or the 10-year Treasury note yield, then again, we may get another leg down. The dollar pulls back. Moving averages, we got the 50 now above the 200. If we get a pullback, that can help the market. As the dollar has risen, we've seen the market begin to pull back. S&P dropped 6%. And again, we're watching, do we break the trend line or do we bounce off the trend line? Do we bottom or do we break? Now, if we're just going sideways with the dollar and this range just kind of goes sideways and we break up, then we could get another leg down. But if we break down, a pullback here deeper, then we could move back up to fill a gap at 5,200 or even try to move to 5,300. Again, I'm watching to see, do we get a 3-leg push down? Do we get a 5-leg push down? Do believe we're eventually going back up to fill that gap at 5,200 on the S&P. 10-year was down 0.5% today, losing the 20-period moving average. We had tried to turn back up above the 10 and couldn't do it. We dropped back below the 10 with the Fed, and now we're down. I'm watching to see, do we get a post-Fed bottom, or do we get a post-Fed sell-off and a continuation? S&P is trapped between the 20-period moving average. We're trying to bounce off of that. We hit it 3 weeks ago. We bounced off of it. Less than that because it was the Friday of that week right there. So just 2 weeks ago, really, the bar from 3 weeks ago is where we hit it at. We rebounded the next week and we halted just below the 10. Went a little bit higher than that this week. Again, I'm watching the 10-week and we're trying to bounce off the 20 again. Do we get a higher low? Or do we break this level? Do we try to find support around our 20-week moving average, get back above the 10, go back and fill the gap at 5,200, or try to make a new high at 5,300, form a divergence on some of the indicators like the RSI, or do we break this level and then try to bottom, or again, get a continuation of this move down, something bigger going back towards our 50-week moving average and our 200-day moving average in the daily time frame? But we're trapped between support and resistance. Support at the 20, resistance at the 10-week moving average. You hold below the 10, that's bearish. You get back above the 10 period, that's bullish. And again, you break the 20, that's very bearish. If you stay below it, that's extremely bearish. Again, we'll be watching as the bulls and bears fight it out for control. I eventually believe, though, we are going to go back and fill the gap at 5,200. And it may be, as I've said 2 weeks ago, that, again, we might try to bottom surrounding this 20-week moving average. I told you that might be a bottom if we get a higher low scenario. So far, we've got a higher low scenario. We'll be watching, do we take out the lows and resume? You are forming a possible bear flag on the 60-minute chart. Even if we bounce and we go back and fill the gap or move to a new high or go lower first and then try to go back up, and the time is short, I believe a topping process is carving out, even though I still think we can get another rally to at least 5,200. This is a 3-month Treasury yield, and again, when you start losing the 50-period moving average, you either get your topping process or you've already had it. Past bear markets there, and here we are right now, right at that level right there. So again, I do believe that we're completing a topping process. The question is, our recent high hold, we get a bigger self, go back up and maybe fill the gap at some point at 5,200, get a lower high, or do we attempt to bounce off the 20 and try to move to a higher high right here, right now? And if we can bounce off the 20-week moving average or slightly breach it and then bounce and get back above it, you can get a lower high and then turn, or you can get a higher high and form a divergence. So you can get a lower high, validate a lower high like we did in July, or you can get a divergence like what we did over at the 2022 top or the 2020 top. So I'm watching this. Do we go up and hit that upper channel again, move above 5,300 and top out, and then move down? Do we get a lower high, assuming we bounce off the 20? Or do we break the 20, break the channel, and have to go lower before you get any kind of meaningful bounce? We're at the moment of truth. We're at the 20-week moving average. We're at the trend line. Talked about the Fed meeting. And again, let me just refresh the chart here. We had the Fed meeting. Again, the Fed meetings have caused tops, bottoms, and continuation patterns of the trend. Which do we get here? Now, again, I don't think we have a top here because we didn't rally up big time ahead of the Fed. Over here, we peaked the day after the Fed meeting. Okay, here we could either form a bottom, okay, a post-Fed bottom, or we can get a trend extension of the current decline. So again, I think it's one or the other. And if we break the rising trend line, then you could get the trend extension. If we just break it and form a divergence and then quickly rebound back up. But there's the possibility, if you break the trend line, a trend extension. The other possibility is a higher low for a bottom or a slightly lower low for a bottom. But I think you're going to get one or the other here, a Fed bottom, a post-Fed bottom, or a post-Fed sell-off, one or the other to give us a trend extension. Fed meetings marked here on the S&P 500 have called the turns over and over again with either top trend extension or bottom, one or the other. So which is this? Is this a Fed bottom or a trend extension? Likely not a top because we didn't really much of a rally and had sold off the day before the Fed. Again, we've got the channel. We're trying to bounce off the channel here of the parallel boundary, the upper boundary. I'll show you it on the daily chart, but you got this bear flag here on the 60-minute time frame. You break down, or maybe we finish it and then we break down. Maybe we go back up and we hit this level and have the pattern. But if we can recover, getting back above the support and resistance line, the orange line right there, and we get back, bring parameter back into positive territory, that's going to be bullish. But if we remain in negative territory with Pring and we remain below the support and resistance line, then you're at risk of taking out the trend line here. So again, we're at a moment, a pivotal moment here where, again, are the bulls going to step up to the plate and we go back up and test the highs or maybe fill the gap at 5,200, or are we going to break this level and get maybe a bottom, break it, and then bottom out, or get a trend extension to the downside? But again, this is still bearish. We're still below the support and resistance line. We're still seeing Pring parameter negative. When Pring parameter went positive after this bullish divergence, you got back above the support and resistance line and you remained in positive territory. Now we're in negative territory. So if you go positive, that's bullish. If you stay negative and break the trend line and get rejection at the support and resistance line, that's bearish. You can see here, and I brought it up close, you can see we've got, again, this potential channel or bear flag pattern. Now, again, we sold off ahead of the Fed. We came up here and we saw the extreme and we rolled over and we came down ahead of the Fed, and then we attempted to rebound with the Fed. We went back up to the support and resistance line, got rejection, and then we came back here and we slightly breached that level today with the bottoming tail. But we came back with the Fed here and the bottoming tail with today's session, but it formed a hammer, and buyers are coming in right there at support. It's our trend line of support on the S&P 500. The larger channel, you've got this bear flag setting up right above that level. Does it play out, or is it a channel where we recover? Now, again, we still have the 50 below the 200. Look at the 50, the green line. 200's up here. Okay, and again, it could be that we just go back up and hit the 200, or maybe hit the upper boundary of the channel, still have this thing fail and go down. If we struggle at that 200 period moving average, again, we lost the 200, tried to bounce, and then we lost it, tried to bounce, and then that was it. And again, we've been below it ever since right there. But again, the 200, if we do rally further, is going to be a point of interest along with the upper boundary of the channel or the bear flag pattern. We have momentum trying to get some traction here, so we'll be watching to see what happens. But remember, even though momentum is turned up here, Pring parameter is still in negative territory, so there's still risk of this pattern playing out. So we're watching what happens here as the bulls and bears fight it out for control. This is the battle line. The battle line has been drawn at the trend line in the daily time frame, the parallel boundary. Here it is in the daily time frame. Okay, here it is. Again, I drew this trend line before we ever reached it because I thought we were coming back to fill this gap. I talked to you about that. And again, I told you that we were likely going to fill this gap. I drew the parallel boundary. That's right where the 200 period is in the weekly time, or I'm sorry, the 20-week moving average is, which we hit it and we bounced off of it. Just below that is a 100, which is almost equivalent to it. But we've seen this 6% drop. Now we're trying to bounce. We have a low, a higher low, another higher low. Okay, and that's formed a potential bear flag here. Now, again, we could carve out a bottom. We start seeing signals all begin to turn back to bullish, get back above the 200 on the 60-minute chart, get back above the 20 here and the 50 in the daily. Then, again, we can make our way to go try to fill a gap. We can make our way to try to go make a new high. The other bearish scenario would be, that would be the bullish scenario. The bearish scenario would be that we get one more drop, but then we bottom out, and then we recover with a lower high or a higher high to 5,200 or the 5,300 range. The bearish scenario would be that we get a trend extension of this. The bear flag breaks down, and we start losing the 100 period, and we start dropping back down towards the 200 period, and we start dropping back down towards the December lows over here. and get a bigger drop. We're at the moment of truth. We're at the line in the sand. Do we lose this level, or do we get the higher low bounce here, or again lose it but then recover? So watching this carefully as the bulls and bears fight it out. There's still the possibility of a divergence developing if we end up losing this area, or if we go up higher and then lose this area, which is still possible. So we'll be watching what happens. Expected a turn off of this trend line. We got it. Okay, I told you that is where the sellers are lurking. We went up 3 points higher, formed a little miniature double top on the intraday charts. I showed you that at the time. And then again, the post-Fed sell-off. Now here we get another Fed meeting. Do we get a post-Fed bottom, or do we get a post-Fed sell-off that gives us a trend extension? We'll be watching. And the bottom, even if we go lower and bottom out, that would be a post-Fed bottom. If we get the higher lows, that would be a post-Fed bottom. Does the Fed give us a bottoming process or a continuation process? The Fed meetings have been calling the turns. We're watching to see if the MACD turns back up here on the S&P daily chart. Made it real big so we can see it. If the histogram goes positive with the Apple earnings tomorrow, again, we'll be watching that. But remember, MACD is still in negative territory, so we'll be watching to see if we begin to try to establish a bottom at the channel line or attempt to end up breaking it. Now, let me show you the candlesticks. And again, here it is up close. And again, look, we've came up here to the 20 period and the 50, and we got rejection. And we pushed down, came down. We got an inverted hammer yesterday. Had the rally with the Fed, and then it failed. And that gave us an inverted hammer. Now we get a bullish hammer candlestick. So you have back-to-back bullish candlesticks here on the S&P daily chart. Now, again, candlesticks are meaningless unless they're confirmed. So we got to confirm it by closing above it. You got to confirm it by closing above it. And again, that would mean we'd have to get back above the 20 period to get above the inverted hammer, and back above today's high to get back above, to close back above the hammer today, which in after hours we are getting a rally with the Apple earnings. So we'll be watching that. You still have a bearish arrangement of the moving averages, but that just might mean we're in a topping process. And again, it might be that we end up getting back above the moving averages and make our way back up to try to fill the gap here at 5,200, get a lower high. But if we don't move to a new low, then there's a strong possibility that, say we recover with the higher series of higher lows, we recover, you can go to the 5,300 area before topping out and form a large divergence here in the weekly time frame with the RSI, as I've been talking about and have shown you that chart even in this video. Some things to be paying attention to as the bulls and bears fight it out. Again, we've got some momentum signals bullish, but trend signals are still bearish. We're still below the 20. You start getting back above the 20 period, then again, clearing the 50, you're going to get a recovery. You stay below these levels, then there's pressure on the market still if we're below the 20 period, and risks that we take out the lower channel line. But today you got back-to-back bullish candlesticks. Again, still getting a higher low, which we've talked about, that low possibly holding, inverted hammer followed by a hammer candlestick. We'll be watching to see if they play out or not. Now, if the rally fails at the 20 period here, we still can't get traction. We're trying to get back above the 10 with the hammer, but the rally still fails. You still have your 100 period moving average right here. And if we lose that level, we lose this low, there's risk of a bigger drop. As I said, we'll be breaking the trend line. We'll be moving below this low. We'll be moving below the 100 period. Then there's risk of a trend extension. But if you can try to bounce surrounding this area, or maybe you jip just below it, and again, the S&P is following what Bitcoin has been doing. Bitcoin did move below the 100 period moving average. We still may see that happen here. But Bitcoin could try to, it's hitting a trend line just under it. It may try to bottom out right here, right now. Even if we violate this level slightly here, move below the 100 period, you still might form a divergence and get a bottom. and still have a 5-leg push down. Are you picking up what I'm throwing down? Again, the candlesticks would have to be validated if we're going to go higher. So what I'm watching is the trend line. If we breach it, do we just get a slight breach? And trend lines break all the time and change. Remember at the October bottom, we broke the trend line. October 2023 bottom, but it just expanded, just moved just a little bit below it. Trend lines change all the time. Channels expand all the time. Do we get a scenario like this, or do we get a higher low here and try to go higher? Or do we, again, get that trend extension and get something ugly? But I do believe that we're going to go back and fill this gap. So I'm either looking for a bottom here or another leg down, possibly for a bottom. Again, I think that's a pretty good shot that one of those, in the weekly time frame, I think we're eventually going to rally back up to fill this gap and get a lower high or move above it and go to 5,300, one or the other. So again, I'm watching to see, do we get a 5-leg push down? Do we get a 3-leg push down? A 3-leg or a 5-leg push down? If it looks like a 3-leg push down, again, you're likely going to move to a new high. And that's why I'm looking for that divergence on the R side in the weekly time frame. If you get a 5-leg push down, then maybe a lower high, and maybe our high holds from over here, our little miniature double top that we've talked about on the intraday charts back up at that time. So the bearish arrangement of the moving averages is telling us we're either going sideways or we're going down. And if we're going sideways, we could bottom out and rebound back up to test the highs or fill the gap or whatnot. NASDAQ was up 1.29% today, up 222 points. Again, bouncing off of this area. Got a trend line here, right here, that again, parallel to this upper level here from these highs. If we break this level, you've got your 200 down here in the 16,000 area. If we bounce off of this area, then again, we'll be watching the 50, we'll be watching the 20. Same thing here. Again, look at the MACD. Looks very, very similar to what we have with the P chart. And again, if we begin to see these things recycle back up, we can get a big rebound here and validate the bullish hammers that formed today. Inverted hammers that formed the Fed day. Again, NASDAQ went sideways for 7 straight weeks. But we peaked over a month ago, the very day after the Fed meeting. People didn't realize that it had peaked until we began to see it break down out of the trading range. Now, it broke down out of the rectangle here, and it back tested it with a rally back up and stalled at that 20-period moving average. So again, here we get an inverted hammer, the Fed day, the same as the S&P, and now a hammer today back above the 10. 10 is still below the 20, 10 and 20 still below the 50. So again, the candlesticks can get confirmed. We get a big rally. We start seeing the MACDs turn back up as it's looking like they might. Then we'll be watching to see what happens. Do we get a recovery? If we do have a 3-leg push down, then we could, again, possibly move to a new high in an overall topping process. We've dropped 8% at the trend line of support, so we'll be watching what happens. Again, inverted hammer, followed by a hammer. Over here we got a hollow red candlestick, and again, all off that trend line that I showed you earlier. We'll be watching these MACDs to see if we try to turn back up here, if we can confirm these candlesticks, and if we do confirm the inverted hammer, you can get back above the 20, and we'll be watching the 50 should that be the case. Again, NASDAQ also has a possible bear flag, okay? And again, we came down, bottoming tails, rebounded on these 60-minute charts, so we'll be watching these 200s, the 50 period down here, the green line, still below the 200 period moving average, but again, momentum is turning back up. So we'll be watching, do we get a big rally back up to test these 200 period moving averages, then go break down, or are we establishing a bottom as the bulls and bears now fight it out for control at our trend lines of support? In a post-Fed bottom, do we get and begin to see all the signals turn back to bullish, or do we get a Fed sell-off and a continuation? We get a post-Fed bottom, we can rally to the next Fed meeting. If we get a continuation, out below. showing you these support levels. Now the market, we gapped higher, but then we came back down to these support levels, and we got little hammers on the 60-minute charts. They were confirmed, and that gave us a rebound and gave us the rally. You got it here on the 60-minute chart. Again, if I bring up the S&P up close, again, you've got a hammer right there. Slightly violated it here, the lower boundary. We had a hammer, and then we began to build upon that throughout the session. So again, are we trying to bottom here, get another leg down, or go up and get another leg down, go up to the upper channel in the 200 period, and then get another leg down, all said and done? So I'm watching this closely, this bear flag pattern. We start getting above the support and resistance line. Do we start seeing signals all begin to turn back to bullish? Bullish reversal of conditions, but again, signals have mostly remained bearish, except for some momentum signal. Watching this closely. Do we break the trend line, or do we bounce off of it?